Thanks everyone for being here today. My name is Joseph Weinberg. I'll be moderating this panel with great speakers that we have here for the next 45 minutes. Quick introduction, I'm Joseph. I'm the co-founder of Shyft Network. We're working on identity and compliance solutions, both on the DeFi side and addressing some of the biggest regulatory challenges in the ecosystem today. I'm an early Bitcoin miner in 2010 and 2011. Been in this space for quite a while, so this topic particularly is pretty close to heart. Maybe we'll start with intros across everyone and jump right into it. Nick?
Yeah, thanks, Joseph. It's wonderful to be here in London. Thank you, everyone, for coming out. I know this re-socialization is awkward, but I think the event is doing a great job today. It's a special time here for me. 10 years ago, we founded Blockchain.info, which was a predecessor for Blockchain.com, in a little town in northern England. And so to be reflecting on a decade's worth of work right now is especially topical on this specific issue. This is one of the reasons I got involved in this industry. And it's still true to our mission today. At Blockchain.com, we're focused on building an open financial system that enables anyone in the world to basically control their wealth, to be able to send, receive, secure, trade, and exchange digital forms of money so that we can basically reduce poverty and increase human liberty. And so I'm really excited to discuss this topic because it was important 10 years ago, and it's more important than ever today. It's also one of the most important arguments our industry can make to win this crowd, and regardless of where you stand on tokenomics or hard money or whatever, we can really do some incredible things by wrapping the planet in this economic fabric. So yeah, I'm really excited to see my friends and colleagues in the industry and discuss this important issue today.
Antoni?
Hello, everyone. I'm Antoni. I am one of the co-founders and a managing partner at Nexo. We started out almost 4 years ago with Nexo, providing banking-like services for the blockchain space. And since everything is coming on-chain, slowly but surely, to an ever-increasing, customer base and just truly borderlessly throughout the world. We work 200 jurisdictions. We built out our product just out of our own needs and what we saw as lacking in the space. The ability to borrow against your crypto holdings, which allows you to hold on to it much longer than you would usually, have the courage and even be in a position to do, out of that, the earn products, the various different assets, just to give you an overall banking experience and, help you solve your financial needs when they're intertwined with the blockchain space. We started out of Europe and the United States, just a very Western focus of our product, and then increasingly try to provide the products in such a way to be more inclusive and throughout the world in the less privileged areas of the world. And super happy to be talking about that and what we had on that front. We work with some of the guys on the panel here, Blockchain.com specifically. So it's a pleasure here to be sharing some insights.
Great. Steve?
Yeah, so I know many of these characters for also about 9 or 10 years. I was started in Bitcoin, as it was then, space in 2013, initially at Fortress, and then helped to co-found Pantera Capital. At Pantera, we invested in a couple of different things in the space: BitPesa, Ripio, and Coins.ph. So we kind of looked quite early at these issues of remittance and banking the unbanked in different regions. In 2017, I started a company called Orchid, which was focused on a different aspect of freedom, which was digital privacy. Still running that. Recently moved to Europe. And also a venture partner at Fabric Ventures, based here in London and Luxembourg. And we've been looking a lot recently at specifically Africa and the recent predominantly increase in smartphone penetration in these regions, which is meaning that you can actually start running wallets and so on. So very fascinated in this topic. Thank you.
Awesome. So first I'm going to kind of walk each of you guys through a quick question to kind of kick this off, starting with you, Nick. So, in my personal experience, I've, been working in developing nations with governments and actually providing wallets from Blockchain.com.
Thank you.
Over the last kind of 4 years to people getting their first crypto. What are you seeing from the, organic wallet growth side to support kind of this, what I look at as the grassroots adoption and spread of Bitcoin and cryptocurrencies generally?
Yeah, so for those of you that don't know, Blockchain.com builds the world's most popular digital currency, cryptocurrency wallet. We've had over 77 million people sign up for one of our wallets. And one of the key differentiators between us and a lot of the other players in this space is we took an early position to build a non-custodial wallet first. This was a position that also enabled us to serve on a very global basis. And so our top 10 markets actually include frontier and emerging markets right now, countries like Nigeria, countries like Ukraine, Indonesia, and many more around the world. And we're seeing stronger growth in some of these markets than the ones you'd expect, like the United States or even the UK. So we are seeing faster than normal growth in those places. And obviously, there's a bull cycle going on right now. If those of you that are new to this, we've been through 4 of them before. And it can be quite horrific when the thing's correct. It takes a long sort of effort to get
it's different this time around.
But it's different this time around. So yeah, I mean, the important thing for me is that we have still a lot of work to do on the financial inclusion and financial literacy side. Steve's right, the penetration of smartphones has dramatically improved access for people in these emerging markets to gain access to tools that put them on an even playing field or even a better playing field than some of the wealthiest people in the world that use centralized financial services in Canary Wharf. And to me, that is extraordinarily exciting. It's cheaper for them to remit. They have ways of earning rewards and saving money that give them rates that far exceed what you could get in a savings account in a traditional bank. And we're watching the real-time unbundling of all of the wealth extraction that the financial services sector has been benefiting from for hundreds of years happening in an extraordinarily condensed period of time. So the reason you see a lot of exhausted people running around this conference is because they're working 24/7, 365 in a market that's alive with an opportunity of a lifetime to give people more financial freedom, more financial tools, and honestly tool them for a way for them to exchange wealth in a way that they never would have been able to before. The centralized banks, the Main Street banks, do not move into these markets. They cannot serve them in any way. And I have a lot of privileges. I've been trying to get a bank account for a charity I started here in the UK for 12 weeks, and I still haven't gotten one. And I've run a concurrent process with 4 of the largest banks in the world, and still haven't gotten it done yet. And so in 10 seconds, you can download an app from your app store and immediately have a bank in your pocket. And that is a powerful idea, tied along with all of the other amazing features that are being developed. So anyway, I'll pass it on to the next colleague here, but that's kind of some things we're seeing.
No, it's I echo your statements on banking myself. Antoni, so, I think one of the biggest things on the inclusion side is, there's this concept of to hold and store assets. There's this concept of being able to transfer, whether it's in remittances or otherwise. And of course, the next thing is really access to credit, access to lending. Could you give us kind of a high level, on your views on this as it pertains to your business? What you guys are seeing in the space as well, growth-wise?
Yeah, well, sure. We were one of the first guys to actually offer credit against crypto. Back in the day, like 4 or 5 years ago, there were just these forums and these subreddits and just like really dodgy stuff where people were exchanging Bitcoin against Bitcoin in a early stage peer-to-peer manner where a lot of fraud proliferated and everybody was losing huge amounts of Bitcoin. Not that much in terms of value back then, but with the price appreciation, I'm sure some people are quite unhappy. So, we developed this concept whereby you can borrow against your crypto. We have $100,000 worth of Bitcoin. You can borrow up to 50K instantly in 45 different fiat currencies, exactly what Nic has been talking about, giving you instant access as easy as downloading an app to traditional banking services, which is not a huge thing for us in the West, but you go south, east, pretty much everywhere from the West, and you start to see that this is truly amazing and life-transforming for, close to 4 billion people. They don't have access to the same tools that we have access to. The JP Morgans, the Chases, the Bank of America's, HSBCs, etc. So, we have been focusing on that, and like when people ask me where are your clients from, it's really fascinating that it's truly everywhere. It's as distributed as crypto itself, and you might have, somebody like a whale in Tahiti or somewhere in Africa, and it totally shifts the distribution of your client base. So, truly people from everywhere. And, I've met a couple of people, just, see the badge, they see Nexo, and it's like, we have been a customer for a while. Thank you so much for having this opportunity, because like previously, if I needed access to the liquidity that's tied up in my digital assets, I had to sell it essentially. And now you can borrow against it, which is essentially what Wall Street and Silicon Valley have been doing for the better part of the last 30 years. They're just continuously borrowing against their holdings. Steve Jobs never sold a single stock of Apple, and just taking that and bringing that en masse to people that never even fathomed that and had this possibility is life-changing, and it allowed them to hold on to their Bitcoin in this fourth bull cycle that we've seen in the past couple of years. Obviously there's some downside risks associated with it, so you have to be careful. And one of the initiatives that we have for inclusion is financial literacy. But it's been a proposition that has been really appreciated by the market and our customers worldwide.
Yeah, and definitely when you think about it from a developing nation perspective, the ability to get leverage on assets just is so incredibly hard. The barriers to entry are so hard. So interesting. And to Steve, so remittance is has a deep place in my heart. From 2013, when you guys started funding, early remittance companies till now, what are you kind of seeing in the differences between where we're at from a growth stage in companies that you guys see today in the portfolio or incoming? Is there radical changes? Just maybe a high level.
Yeah, so BitPesa, which is one of the early things that we funded at the time, was just trying to combine M-Pesa, which is the Kenyan mobile money payment system, with Bitcoin and allow people to it's basically like if you're in the UK and you wanted to send money and get it directly on M-Pesa. That was the initial application. And now M-Pesa is providing a lot of liquidity and providing trading services across all of Africa. The other one we did back then was Ripio. Bitpagos was the name originally. And they had a similar thing. It was just very, very early and emergent and just tiny use cases. But people looking at it and saying, first of all, I want to be able to hold assets in something that's not my local currency, because even though Bitcoin goes up and down, it doesn't just go down. Well, sometimes it does, but it doesn't just keep going down every single year, which is what you see with many currency. I think South African rand has lost something like 50% over the last few years against the US dollar. So you had merchants and individuals wanting to be able to hold things. And then also the idea of just being able to bank, like being able to have, we take this very much for granted in the developed world, of the idea that you can just get a bank account, you can store your assets somewhere. And this is, in varying degrees, practically impossible in many cases for the ordinary person. What we're seeing now in Fabric is much more advanced systems, much more evolved solutions. We're also seeing the emergence of stablecoins as alternatives. So maybe you don't want to hold it in Bitcoin, but which is still a volatile asset. Well, everything's volatile, I guess. Maybe you want to hold it in the currency, the euro or the dollar, and so on. So definitely starting to see a lot more sophistication in that space. And I think that, as we were saying, from 2013 to now, we've really seen a much broader penetration of more affordable smartphones. We're still coming down that curve that have the capability to run local wallets. So that's been... The other thing we've seen from the Orchid side is we're starting to see penetration of our applications. So we have an application that allows you to connect to multiple providers running VPN services. So you can build different circuits, or you can just use it in a simple way. And so it's outside of normal payment rails. So you can use crypto, you can also use in-app payments, regular payment rails. But it also works in a way that's harder for it to be filtered by regular firewalls. So we've seen a lot of growth in places like Nigeria. And then the conversation we have with users in Nigeria is like, what else is going on? They're like, well, it turns out we're like trading Bitcoin, or we're storing, or we're trying to like build these like proto-banking systems.
Right.
So I think it's starting to happen.
Yeah. Slowly but surely.
Yeah.
Yeah, and I think that's kind of come to the next kind of piece here is, El Salvador is been, we for the last 10 years, we've all been saying that Bitcoin will solve, a lot of these problems. Every year we've said that. And I think only in the last 18 months have we actually started to see, larger initiatives that are a lot more top-down. As I mentioned, things have been really grassroots developed. Nigeria is a really good example of that. I think it's the third or fourth largest trading country today in terms of Bitcoin. And so as we kind of get to the El Salvador model, as I kind of call it, never been done before. This is really taking Bitcoin as, in I think my view, as a reserve asset. What are you guys' thoughts on this approach? What do you guys look at from like a risk versus reward? Is this, is there things to consider that might be a con in this model? Kind of what's your guys' thoughts? Maybe we start with you, Nic.
I think it's interesting. If you think about the arguments that have been made against crypto over the last decade, at first it was only used by cyberpunks, and then it was only used by criminals on the dark web, and then only used by nerds, and then only used by small companies, and now it's only used by small countries. And I'm sure there'll be many more arguments made against crypto that we'll all have to defend against over the coming decades. But this is a pretty big deal because it possibly changes the tax status of the currency itself and the way certain countries treat it. Now, I think there's some valid criticisms of how the program was rolled out in El Salvador, being top-down, when I think one of the main ethoses of cryptos is that they're really grassroots and adoption happens because people are doing it voluntarily. That being said, the latest reports that we're hearing suggest that over half the country has actually signed up for a digital currency wallet. Now, anecdotally, I can share at Blockchain.com, we were seeing just a trickle of wallets coming in from El Salvador over the first maybe 6-7 years. And this year, we've seen a 600% increase in the number of signups coming up from El Salvador. And so it's not just a little thing happening, it's a real thing. And it's not just El Salvador. I mean, the GDP of Tesla is actually quite a bit bigger. They're holding crypto on their balance sheet now, and so are many other companies. And so the conversation is really changing, and I think the arguments are being debunked around whether or not it makes sense to hold some of these assets in your treasury, whether you're a country, whether you're a company, whether you're a family office or a high net worth individual. And soon I expect to see some of the largest, most patient funding sources move in. But frankly, it's one of the most exciting things that's happened in this space is that capital was the last one to show up. And so for all of these people all over the world that participated in this network effect value creation, that was an opportunity that was never present before. They were never accredited investors that were allowed to do any of this stuff. And all of the clients at Goldman Sachs that are pounding on their doors to get access to this stuff, Goldman has to tell them they can't serve them right now. So where do they go? And they sign up for services that are being built by entrepreneurs all over the world. So I love that about this industry. And I think the El Salvadorian model is blazing a trail here. I expect other countries will follow suit. I think there are other countries holding crypto on their balance sheets that haven't talked about it in public, partially for security reasons, partially because they don't want to raise any flags for for anybody else. But for every company that goes out in public and says they're holding some treasury in crypto, there are probably 10 to 20 that are doing that aren't cheerleading it. And so there are real good reasons not to put yourself out there as a high holder of crypto because you will be targeted. People will try and get access to your wallets. And so for security reasons, it's clever to be rather quiet about these things. So anyway, just some observations. But I think the opportunity for El Salvador is a big deal. I mean, the amount of money that has been stolen from El Salvadorians working abroad, remitting money back home to their families in a country that desperately needs it is unconscionable. And now they have tools that allow them to teleport value from the countries they're working in back home to their families at a fraction of a penny. And that's a big deal.
Absolutely, and that's, remittances in El Salvador are between 20 and 30%, so it's of GDP, that's a substantial amount. So obviously it's an experiment, and there's going to be hiccups, early with the tech, with the wallet, etc. But that's a normal trajectory of something as innovative. And, I've made this point that, quite frankly, nowadays, being outside of crypto and being outside of Bitcoin and having zero exposure is the biggest risk. It's much bigger risk than actually owning some and, living through a bear market, as some of us have. 2018, we saw Bitcoin lose, I think, something to the tune of 86% throughout the year of its value. But for countries, especially small ones, where you don't have this huge amount of opportunities to boost your GDP, I do think it makes sense for companies such as El Salvador and some of the smaller countries to hold Bitcoin and other crypto, perhaps in smaller amounts, of course, on their balance sheet, because Bitcoin has been the best performing asset of the past decade, the past year, the past 3 years, the past 5 years, whatever time scale you want to take. It has outperformed just about any asset. So the risk really is being outside of it all than being in with single digits of your treasury. And same goes for countries and companies, obviously. But yeah, I think it's a much larger risk, and sooner rather than later, other countries are going to follow. Just like with Tesla, we saw other S&P 500 companies come into the treasury game of holding crypto, and that's a trend that it's going to only accelerate.
Steve, do you have anything to add on that one?
Yeah, it's kind of interesting, right? Because you look at it and say, well, on the one hand, you might think it'd be better to hold a stable coin.
Yeah.
So it's like, hey, I want a cryptographic like USDC, right? But then you're making a political choice. Yeah. It's like, okay, now I'm holding the dollar, basically. Or I'm holding the euro, or I'm holding the one. Like, which one do I want to pick? So I think it's interesting that they went in a different political direction and said, no, we're just going to... Because I wouldn't have said, hey, I'm going to hold Bitcoin, I'm going to use Bitcoin as my payment rails. Like, Lightning's great and so on, but there are other payment rails that I would perhaps have chosen and said, I think it's a bit more evolved. I think the tooling around Ethereum is better. I'd probably do that. But the fact that they did Bitcoin and said, not only is it something it's a store of value for our treasury, but also we're going to put in Lightning and these things, which has got to be the biggest build out of Lightning, I think, that's happened so far.
Absolutely.
I think that's fascinating. Yeah. And I hope the experiment works for their sake primarily, but I also think it's a fascinating case for all of us who are in this room in this industry who've been doing this either a couple of days or for many or a decade to sort of work with these nations and individuals who want to embrace this. Back in 2013, we would be pitching to LPs to raise money for a venture fund, and the question was, is this thing going to survive? Is this thing going to last? Is it, And I'd be like, yeah, I think it's great. It's going to work out well. And as you said, it would tend to be criminals and the conversation around that. Now the conversation has switched to, is this thing going to survive regulation, or is it going to get co-opted by a government? And just to switch this slightly to sort of an area that I look at a lot, the risk I see right now is not that cryptocurrencies don't survive, is that they're co-opted by central banks, by institutions, by corporations, and then they become tools for them. Because just like we think through all the cool programmable things we can do with blockchains, whether it's with Ethereum, NFTs, and all these different cool things we can do, we can also program the money in a different way. We can say, oh, you're in Salvador, you want to use that to go buy some alcohol? Sorry, no, you can't buy alcohol, you have to buy diapers. And of course, keep playing that one out. So
yeah, and I think that kind of comes to even the next question too. Is we have we can't regulation's a big topic across the space today. I think one of the benefits of less regulation and compliance in some capacities is it just allows for cheaper services. What do you guys think the relationship needs to be between governments and regulation and continued growth? How does that create impacts? Do you think it does? Do you think that the regulation that we're seeing today is healthy for really bridging this gap or divide in terms of conclusion? Curious everyone's thoughts.
Well, regulation is going to happen regardless of what we as panelists or generally as a community think, and it's just unrealistic to have an asset class surpass $2 trillion and then somehow this stays out of the purview of regulators and watchdogs and consumer protection. It's not realistic. I know this was the early ethos of the space, less regulation and just, decentralize everything, and it's not encapsulated by any of the regulatory frameworks, but that's just with the size, and I'm glad that we've grown so much that we need regulation. It's just not realistic. The best case we can hope for is to have some say in the way that the regulatory frameworks and regimes are built out, we're very vocal as a community. Crypto Twitter is a powerful tool, as the infrastructure bill efforts clearly showed. There was some steps back retraced from the earlier propositions because of the overall community and how vocal it is. So this is what we should be aiming at, proactively engaging with regulators and trying to have the best possible, concise, clear, pro-business rules that could possibly be designed so that we can have the certainty as companies and individuals as to how we operate within that environment, rather than stick our heads in the sand and just pretend that this could possibly go away. And the same goes for decentralized offerings as for centralized. The writings are on the wall, and we all see what the SEC and the US regulators are talking. I don't think this should be taken lightly, and whoever does will come to regret it. So it's better to engage proactively and just figure this out in the most beneficial ways. The good thing is nobody's going to ban crypto. We know that. I think by now, just as Steve said, just how long it has been, and Lindy effects kicking in for the whole crypto space and Bitcoin. But yeah, I mean, there's going to be some regulatory challenges, and we have to see how we go about tackling them.
Yeah, I try to break regulation down a bit into thinking about why we're doing it, right? So there's various different kinds of regulation. So if you're raising money for a project, the reason you have regulation there is you want to make sure that grandma or grandpa doesn't lose all their life savings. You're like, okay, are you an accredited investor? Did this company properly disclose what they're trying to do? Do you know what, and do you kind of know what you're doing? Like, you sort of sign the permission waiver that says you know what you're doing. So that kind of made sense when we had the ICOs, where it was like, I've got a white paper, just send ETH. But on the other hand, grandma wasn't really using MetaMask to send ETH, so it wasn't clear who we were protecting. And now we have this regulation coming after DeFi, and it's like, oh, we're coming after DeFi because people are getting scammed, and there's this stuff, and that definitely happens. And I play a lot in DeFi myself, and you've got to really be careful what you do. But again, there isn't really like the ordinary person going in and like getting their MetaMask and their Treasury and doing this stuff. So when they're coming after DeFi and they're saying, oh, well, like we really want to regulate this and control this, I'm a little suspicious as to what's the real reason behind it. There are other reasons why we should have regulation. AML KYC is an extremely burdensome and huge thing, especially in Europe, if you try and get a bank account, especially if you're a US citizen. And yet there are studies that show that very little is really caught using these things. Like the anti-money laundering bills and the checks that go on, there's a huge amount of work goes into it, but very little really comes through this. And in the end, what we're doing with these things is that, and that's the area that I've been focused on, is that we're trying to put surveillance into everything. We're trying to put surveillance into every single transaction. That's what I think the government's sort of underlying, like either overt or covert goal is. And I think we should be pushing back against that. And this is what the big part of the infrastructure bill that is still has been some problems, is the idea that they shall monitor everything. And because otherwise someone might sort of screw up on their taxes. The US is a self-declaring tax regime, so it means that we all declare our taxes. And if the IRS decides to audit you in some way, they can come after you, and the fines and the penalties are very intense, and it can even be jail time. So the motivation to try and screw up your taxes and hide something in a wallet here and put it through Tornado Cash, yeah, sure, you can think about doing that, but yeah, there's a lot at risk there. So to me, it's like solve some of that stuff with technology, have better analysis tools. The tools for tracking taxes and so on could be better. But I also am very resistant to this idea that we should just say, oh yeah, regulation's coming, and no offense, but like, let's just let it happen, because I'm questioning, why do you want to regulate this? Like, what's the real reason behind what you're doing? And to conclude this, my little rant, but to conclude this, I think what's happening is the central banks and the governments are saying, this is a threat to our ability to print money, to control societies with the issuance of money, and so we're going to find any reason we can to come after this. And that's where I think it's really coming from.
No, completely agree with that. And so I guess to kind of move into the last section, we have about 10 minutes left. we always looked at Bitcoin and praised it early on because we had no other options, right? It'll solve remittances, it's store value, and all these things are arguably still true today. But there is a rise in stablecoins and in incoming CBDCs. DeFi, of course, is an ever more interesting topic in the case of inclusion, specifically providing new types of services. Do you guys think this changes the dynamic or the value proposition for Bitcoin? Do you think these things coexist? What do you think the kind of future looks like, cooperatively, I guess, if you will?
I'll go first. Always fun to wade into these waters. Look, I think obviously let 1,000 flowers bloom. I think no one can rest on their laurels. Like everything needs to innovate. I think there's some 16-year-old kid dreaming up some project today that has greater efficiencies with new features that enable more capabilities than we can possibly imagine today. And so I'm excited about that project. I don't know about it yet. And when it comes along, I hope we can integrate it into the Blockchain.com wallet and offer it to the world. I've been in this space since the early days, and I loved Bitcoin. I was a gold bug before that, and I used to collect baseball cards and geodes, and I'll collect whatever's cool in the future too. I think Bitcoin has clearly solved a use case around a digital gold thesis. And we're seeing some extensions of that with the Lightning Network and potentially going back to its roots around being a peer-to-peer form of electronic cash. There are other cryptocurrencies really focused just on that. There are privacy solutions that are focused on really strict privacy transactions, which are also valuable in a pluralistic, open internet society. We don't want authoritarian systems surveilling absolutely everything we do. We have freedom of speech, we have freedom of religion, we maybe should have freedom over how we control and store and send and receive and transact our wealth. It's an important discussion to have. So in the long run, I think there are going to be some exceptionally interesting projects that come out. There's also going to be some that don't make it. And we've already seen that. If you look at the top 10 cryptos from 2013, there are only 2 in the list today that are still there. And there's rocketing projects that have surfaced in the last year that now have billion-dollar valuations and really strong network effects. If they can prove out their value propositions, I think we're going to see some really exciting ones. And there'll probably be like 4 or 5 really predominant rails, and then a long tail of fit-to-purpose blockchains that are doing really specific things. But it's going to be for sure a weird decade. But here's where it's headed: the internet will be the largest creator of wealth in the world, and it will be its largest kind of GDP in the world by 2030. It's going to need a native financial fabric in order to facilitate global commerce and interactions. And the crypto fabrics that are natively nesting into this thing are proving out that work right now. And so I'm encouraged by all these developments, and we need a lot more help to build these things. So quick plug, we have over 100 open roles at Blockchain.com. So if anybody is interested in working with us, we'd love to have you join the team.
Yeah. Well, Nic captured it quite nicely, so I just want to directly answer your question of stable coins and central bank like experiments versus Bitcoin. I think Bitcoin has an inbuilt advantage of it just being censorship resistant and immutable and irreversible, the transactions, because I hope they're not Tether and USDC guys here, but in the code they have left doors by which transactions can be reversed. They don't use it very often, right? But they're there. Whereas in Bitcoin, you don't have that. Once it's confirmed, and the economic incentives are too powerful for the transaction to be reversed. It's nearly impossible. And I'm quite certain that the Chinese Communist Party will have their tools in place to keep control of all the transactions, and probably the US and everybody else, with the benevolent disguise of this being used against money launderers, etc. But the option will be there. So whoever underestimates Bitcoin and has done that in the past has been wrong, and I think will continue to be the case for the foreseeable future.
Yeah, I'm not a maximalist. I think that, especially with cross-chain solutions like Cosmos and Polkadot, we're kind of just leading towards a world of it's a bunch of cryptography secured by different mechanisms, proof of work, proof of stake, and so on. So I'm excited for a world where these things interoperate. Obviously, as an investor, we have to make bets, and we try and do these things carefully. But it's I've been proven wrong more often by trying to be maximalist on anything. So I'm excited for how this thing plays out. I do think this Bitcoin Lightning, it's not exactly an experiment, but this deployment is fascinating and does take us from what was becoming just Bitcoin and digital gold, which is really good at being, to like, oh, we can make payments for this stuff. So I think that's great. I'm very supportive of that.
Absolutely. So we have about 4 minutes left. Do we want to try to do a couple questions from the audience while we can? Does anyone have any questions? We get a mic potentially.
Yeah. Oh, okay.
Thanks, mate. What do you think about Bitcoin or cryptocurrency's role in equality, talking about sort of financial inclusion for people? Clearly, there are different gaps between race and gender across the entire world. You look at a country like Afghanistan that's just fallen to the Taliban, for example. Women's control over their own finance in that country is now under jeopardy, serious jeopardy. What sort of roles do you think cryptocurrency can play in that and liberating people and their finances in that way?
I'll take this one really quickly. Last week, I met with the founder of the Human Rights Foundation in New York, and he's a huge proponent of cryptocurrencies, basically exactly for the reasons you just raised. Now, I think if you look at the distribution of cryptocurrencies and some of the earlier ones, without a doubt, they were adopted by young people with access to technology, predominantly in the West. And so there's obviously, an argument that that was not very equally distributed. There are newer cryptocurrencies, though, that have had larger widespread distribution mechanisms that airdrop tokens to a widespread number of users that were globally distributed. So regardless of that debate, I think if you look longer term, there are really interesting human rights arguments and human freedom arguments for why cryptocurrencies are vastly superior to nationally controlled ones, especially in countries where you have disproportionate power dynamics in family households. How is someone going to get access to, say, literature or driving lessons or controversial concepts that for us would be easy to access but wouldn't be in some of these other jurisdictions? And so at the end of the day, in many ways, the root of all evil may in fact be centrally controlled money. You have to search where it comes from and understand what that does and how people get access to it. So if we want to fight poverty, and we think that that's a real damaging factor in human existence and freedoms, and I think one of the ways we needed to really support a better future is to give everyone an equal playing field to access. So the financial system should act more like a global utility and less like a privileged thing that some people get to use, if they have all the right credentials for something. And so in the long run, I think this is part of the march toward this world where we leave in a slightly better place than we found it. To me, this is the tool. I have not found anything else that can turn the needle any more than this. So to me, it's a total effort. That's why we don't sleep and we work on it constantly.
We have 1 minute. You guys want to add to that? Or?
We got a question in the back.
Oh, there we go.
Sorry.
Yeah, thank you very much. My name is Rick Shreves, and in the last 5 years, I've spent most of my time working with international NGOs, trying to convince them to use new digital financial tools to help improve financial inclusion. So whether it's Oxfam, Mercy Corps, Red Cross, et cetera, the problem that we found across the board is always the same, which is simply putting those tools in the hands of individuals does not solve the problem. In fact, in some cases, it actually worsens financial inclusion for reasons like the last gentleman mentioned, say gender inequality, where the male head of household controls the only phone in the house. Mm-hmm. Also the lack of on-ramps and off-ramps, the inability to meet any kind of KYC requirements. So my question to you as the panel is how do we reach the most vulnerable, the people who are really out there on the fringe, who live in a cash economy, who have problems with the friction between the boundary between digital financial and traditional financial systems?
Yep.
Anyone want to take it?
I think it's going to require a hero's effort, to be honest. And the NGOs will need to play a role. And the companies now in our space that have finally accumulated significant capital positions, most of them have some kind of financial inclusion mandate as part of their either ESG or corporate governance or CSR work. So the money will come, but it is going to take a long time. And unfortunately, someone's going to have to go to the last mile and do the education on the ground, the financial literacy work. But the important point I would make is that we do have the tooling now, even though the dynamics on the ground are probably not ideal always. But there are people that care about these things, and if that's something you'd like to talk with me about, I'd
Yeah,
love to find you in the hall, and we can.
I think it's a good challenge. I appreciate you raising that point. So I think as an industry, we need to do more.
Yeah.
Thank you.
Alrighty.
Cool. Thank you
Thank
very
you,
much.
everyone.
Thank you so much, guys.